Biden's green stimulus would send silver soaring to $50. Hello there, my friends. Chris Marcus here with you for Arcadia Economics and this week's physical silver and gold market update. Andy Schectman is joining me again of Miles Franklin. We got a little video feed today, so you're looking quite dapper there, Andy, and nice to have you back on the show. How is everything going with you today?
It's going good. I miss you up here being in Minneapolis. I miss seeing you. Nice to see you in person again, and I'm well. Thanks for having me back, Chris.
Yeah, well, Bill Murphy needed a lifting partner here in Dallas yesterday, so I had to hop in and do that. Although I did meet someone from the Hunt Brothers extended family, which is exciting because I have been planning one day to do a book on that whole situation. I actually had contacted the Chiefs. I tried getting in touch with Clark Hunt for the big silver short, so I thought that would have been a really interesting perspective to include. So maybe one day soon we will get to dig in there. And
I never put two and two together and realized that was the same family. But I'll tell you, when I look at Bill Murphy, it amazes me that that guy was a NFL receiver many years ago. He's a tough dude to be able to hang with the NFL players, especially back then when they wore leather as helmets.
Well, you should come down and crank some iron with him, and you'll see why the man's the legend that he is. Been great to see him here. Fortunately, some news that would even make Silver Bill Murphy smile, because before we get into what the customers are doing, I thought this was an interesting one. Biden's green stimulus would send silver soaring to $50 by Bank of America. So Andy, I know we're the conspiracy theorist and we're talking our book and, you know, and all that stuff.
Yes.
But I would just point out that Bank of America and it's not done. Citi states silver prices to rally over $40 in next 12 months. And then where is, then here's Goldman Sachs. Silver to benefit from global solar surge. I just recorded the call with Dave Kranzler. We were giggling at this, where now with silver at 24 and a few potential upward solar surprises in the coming months, we reopened the trade. So everyone's concerned about solar demand. No, none of the banks mentioning what the Fed is doing, but still, I think that it's significant that, you know, again, we were looked at like fringe conspiracy theorists, yet here it is. Now you even have the mainstream banks talking about $50 silver. So what do you think about that one?
Yeah, well, I mean, if you take a look at first of all, I mean, I guess they're all assuming that Biden wins, number one. Number two, due to his Green Deal, of course. Number two, if you take a look at, you know, right now, almost, I think it's over 65% of all the silver that is mined every year goes to industrial uses. And, you know, now that they're moving in that direction, heck, already California passed a law, I believe it was 2020 and thereafter, every piece of new developments had to have solar tied to them. And, you know, when you talk about the proliferation of solar and of green, and how about of battery-powered cars instead of combustible engine cars. You know, they only represent 1 or 2% of all the cars on the road, yet the need for silver is massive. And that's one of the things, Chris, that I think needs to be talked about more. I'm glad you brought that up, is that, you know, on one end, you have gold. On the other hand, you have copper, and they bracket silver in the respect that copper is fully industrial and gold is mostly monetary. Silver is both. And I think that's one thing that needs to be talked about, is that as one grows, as the industrial demand grows or as the investment demand grows, it feeds the other, as there's just not enough above ground supply to handle all of it. And as we move to a digital world and to a greener world, if that's the path we're choosing, why then, yeah, silver ought to go higher just based upon supply-demand fundamentals. There's just not enough of it to facilitate a world that moves completely and totally green. At the same time, it moves completely and totally digital and more of a technology aspect to everything that requires silver as the conductor. And also, I think that we shouldn't overlook the investment side. I think that when you see Warren Buffett, and when you see the Ohio Police and Fire, when you see hedge funds, when you see the awakening, people pulling metal off of, and they're called the others on the COMEX, the family offices, the sovereign wealth funds, the high net worth, people are awakening, I hope, and I think, to silver and the benefits. And all of those benefits that will come of investment also will come, I think, as the industrials start to really, really jump on board to secure their position. If I were a company like Apple with all the money, I would go ahead and buy all the silver I needed to make phones for the next decade. They can afford it. Or any of these companies, Samsung or Sony, they need it. It's inelastic. And because it's both industrial and monetary, one of the only, if not the only commodities that can say that, as the industrial applications grow and rise, it will only add that much more fuel to a investment demand fire as well. So I'm glad you brought that up.
Yes, and although Andy, well, that was quite a thorough answer. It was good. My motto here: is there anything silver can't do? And let's not leave out that Biden has championed portions of the climate plan, which calls for the U.S. to reach net zero carbon emissions by 2050. I love when the most incompetent organization in history makes 30-year plans. The Fed can't even telegraph what's going to happen next week, let alone 30 years. But that aside, the switch to more renewable sources of energy, including solar, would have to be a big part of that plan, and silver is a key ingredient. So now we have silver saving, well, I don't really know if there is a global warming crisis, but a perceived global warming crisis. Maybe I'm wrong on that one. But in either case, one way or another, silver to the rescue.
Yeah, well, maybe that's why JP Morgan did violate laws to accumulate the largest physical position the world's ever seen. Maybe they know something the rest of us don't. And regardless of how it plays out, in a digital world, the world we are moving into, where I think you will see, regardless of who wins, a push towards a greener future and a digital future. Silver is a necessity. There's no question about it. And it happened with Palladium back in the late 90s or first part of the 2000s, where Ford Motor Company tried to take a big stance, a big position in palladium as platinum was getting too expensive, and they wanted to retro their catalytic converters and use palladium. And that's why I think a lot of these industrial companies are quiet, closed-lipped about their desire to accumulate tons of silver. But if I were seeing this and I were, on the board of directors of a major company like Amazon or Sony or Samsung, I would say, look, let's just jump in with both feet and secure our position. If silver's $100 an ounce, and it costs $10 an ounce to make an iPhone versus where it is now, and it only costing a couple of bucks worth of silver for an iPhone, you don't care because you need to make that iPhone. So whatever silver costs, you need to get. And I think we'll reach that point where the industrials, like Ford Motor Company did in maybe 20 years ago, pushing the price of palladium from the low 300s up above 1200. At that point, it's all-time high. I think you'll see that with silver. And that's one of the things I love so much about silver, Chris, is that it's got that monetary history that people forget about, but it's hugely important in industry. And where I think gold will ultimately go, silver will become the go-to substitute for gold. And when that happens and the public starts to really jump in on silver, I think that's when industry starts to make their move to secure production, because without it, you can't make it. So you need it. So you buy it at any cost. And if you think it's going higher, you'd be foolish not to be preemptive in that and to secure your position.
Yeah, and actually it reminds me, just a couple hours ago, someone sent me an article where the author was saying they expected the gold to silver ratio to increase because so much of the silver is used in industrial demand, and there's growing industrial demand. I wasn't quite sure, like what
I don't get that.
I mean, it's like we agreed on the facts, a different conclusion. Although you also mentioned maybe JP Morgan knows something that the rest of us don't. I'm not sure if that's the case. Maybe they've just been listening to your weekly physical silver and gold market update.
Maybe they read your book.
Yeah, maybe they got the book or they're subscribed. By the way, great reason to subscribe right down there, subscription button and notification bell to Arcadia Economics. So,
you know, I talked to Keith Newmeyer today, Chris, and he told me what's coming out of their minds is 8-1. And at 8-1, when you look at a ratio approaching 80-1, which is way out of whack, like I know you love my analogies, that's like, as I've always said, 4 feet of snow in the Florida Keys. It just doesn't make sense at 80-1. And he's saying what comes out of the ground is 8-1. What other investment can you get? I asked him, I said, Keith, you know, you're telling us that what comes out of the ground is 8-1. Do you think we'll get to that point in real price? He says, I do. He says, ultimately, a commodity has to fall to its production price or to its production ratio. What other investment can you make that both gives you privacy, gives you upside potential, has a 5,000 plus year history of money, real upside potential when you look at everything else that's overinflated in terms of asset prices, and gives you a realistic potential of making tenfold on your investment? Well, I mean, that's not pie in the sky when you talk about what's really coming out of the ground. And when we talk about shortages, being in deficits already in terms of what is mined each year and what is consumed, hey, who's to say that we don't go there? I know there are some people who think it'll go to 1-1. So at an 8-1 ratio, Chris, anyone who owns silver now, you're talking, if you traded your gold for silver, the potential of 10 times, I mean, it's crazy. I don't know that we'll see that, but I simply say to you that there are very few investments that I see that offer that kind of potential, that have a supercharger, and that being not just the investment demand, but the massive industrial demand in an asset class that is in deficit and is depleting. So I think, you know, I think it's huge. I think the potential is outrageous. And at the same time, it's money, it's wealth. And so it provides so many of the things that are important right now when money is being inflated away and asset prices are so high. Heck, silver's on sale. It's massively in deficit. It's needed for industry. And I think it will go much higher as a result at some point due to the investment demand as well. So it's a good place to be looking as far as I'm concerned.
well, apparently you're not the only one who is expecting metals to go higher. There's Bank of America, not just saying $3,000 gold, but gold price to surge past 3,000. Goldman, 2,300. Morgan Stanley, could investing in gold add a new dimension? UBS, Goldman Sachs on silver. Bank of America on silver.
You know, it's the only company in there who said it's going lower. I saw that article.
EPM Group?
No, the only company that says it's going lower is JP Morgan. Everyone else said it's going higher. Who do we believe?
Well, I don't know. I mean, today it did go lower, and Andy, what we see, we're recording this as of Wednesday. I know we post them Sunday, so God only knows what will have happened, or Saturday. God only knows what will have happened since then. But we saw today, I was checking the news, maybe I went to the Wall Street Journal where they have 1 to 2 commodities articles per week and they just didn't cover it. But why do you think silver was at 24.5? I mean, it looked, you see the last 2 days, it was pretty stable, and then just dropped in the span of a few hours, $1.50, then rebounds up 50 cents. Any thoughts on what happened, or perhaps more significantly, I'd love to know, and I think a lot of people would like to know, you don't have to give personal details, but as people were calling, you were talking with customers today, what was their reaction to this?
Yeah, so one of the things that I've noticed lately, which is unusual, is that the price of metals are moving very much in tandem with the stock market. When the stock market is up, we see the price is up. When it's down, we see metals down. And, you know, the old conspiratorialist in me would say, well, they're trying to mitigate panic. They want to, you know, maybe there's an algorithm tied to the market crashing so that people don't link the rationale of owning metals as an alternative to fiat, as an alternative to a stock market at all-time highs with detached from reality. And as it starts to correct, they don't want people running out the exits into metal. I don't know, but I find it unusual when a group like Ibbotson and Morningstar comes out and says that gold and silver and platinum and palladium as a group are the only inversely correlated assets to the US stock market. They've publicly said that stocks and bonds are positively correlated now. And as the market is moving down, we see the price of gold and silver move down. It's temporary. I don't think it's anything lasting. I will tell you, it's always been interesting to me that when the prices fall, our business goes up exponentially, more so than when the prices rise or do nothing. I guess it's because of people like you who have done such a great job of alerting people to the supply-demand fundamentals. And I think they look at it as a subsidy, as something on sale. And when you look around what's happening, there's so much happening that doesn't make sense to prices being where they are. In particular, I look at, what's coming off the COMEX. When you look at all the banks repatriating their metal, when you look at the IMF calling for a new Bretton Woods last week, there's so many things happening that should be gold and silver friendly. And maybe that's why it's not at the moment, because the people who are trying to corner the market and accumulate the physical also are able to sell short. And they're able to do it to cap the price, to cap the rally, and to cap sentiment. But it doesn't change a thing. The fundamentals have never been stronger, both industrial and in terms of its investment side. And I think that's why people realize that. Look, the way that you win in any bull market, whatever the asset, is to buy the dips, not chase the rallies. A day like today, people are wising up to the fact that the only way you can successfully manipulate a market over an extended period of time is to push it the direction it's going. So I think that's what they're realizing, and they are capitalizing on the pullbacks, and ultimately I think that and has proven lately to be a good idea, and I think it will continue to do so.
Well, I appreciate that. And Andy, you gave a great list of things like the Bretton Woods, these guys talking about resets. Pretty good list, although because I hold you to a high standard, I'm going to point out one you missed. Let's not forget the Davos crowd already.
I was just going to say that, yeah, the Great Reset, the World Economic Forum. That's unbelievable to me that that's called the Great Reset. And you know what's really interesting too? If you look at that, if you go back to 2017, when the Germans started repatriating their gold, they called 2020 a hard and fast deadline to get it in their possession. And ever since then, many of the central banks have used 2020 as their talking point. So I think that dovetails nicely into the Great Reset by the World Economic Forum in the next few months. Yeah, that's kind of the icing on the cake. You got the Basel III, the new IMF calling for Bretton Woods, and the Great Reset on top of all the commercial and central banks pulling their money off the exchange or taking possession of it off the COMEX, or out of New York or out of London. The Bank of the Dutch National Bank, the Bank of Turkey, the Bank of Poland, the Austrian Bank, the German Bank. They're all taking possession and removing counterparty risk. And the people pulling it off the exchange, as you had a guest on your show the other night eloquently said, and I really couldn't agree more, the other category, trading on the Globex, which is very private. Who are they? Sovereign wealth funds, high net worth individuals, family offices. You're talking the wealthiest, most sophisticated people are realizing that it makes sense to remove counterparty risk. And it all falls in line with this, a reset. Well, if you're resetting, you want your tangibles in your hand so you don't get rehypothecated or get, settled with everyone else waiting to get a little piece of the pie. Getting it out of the system is a really darn good idea, and I think that's what you're seeing ahead of the Great Reset.
Speaking of tangible, holding it in your hand, you mentioned the industrial users, which I think is an interesting thing that doesn't get talked about much. Ted Butler talks about it, and what he actually presented on at Silverfest, which actually maybe we'll link at the end of the video to that one because I think it's worth seeing. He talked about the wild turnover in these COMEX inventories. So metals going out of one vault into another vault, out of that vault into another vault. Andy, I know you know this well, and I learned the hard way when I bought my 1,000-ounce block that I carried home on the bath train. And eventually, when I was getting ready to leave New York, I took it down to, I think it was IDC in Delaware. And, they were storing it for a while I was floating around the globe. And But what I remember is that anytime they looked at it, I mean, there was a hefty bill there. You know, you move that stuff anywhere. So it was interesting. Ted felt the only reason he could think of why would metal be moving in between these warehouses is because of intense industrial demand. So you're a lot closer and can offer a more informed opinion than I could on that. Does that sound right? And I guess maybe the add-on question, I mean, it has been going on for a while. It's not like it just started last month. So how about you take it from
The
there?
part about that I never quite could understand what was, he said that nothing was ever leaving the building, moving from one account back to the other, and you know, I don't quite know unless they are moving it to an account, a commercial bank's account on behalf of an industrial. But when the stuff starts leaving the building is when it will get very interesting to me. Now, I don't know if the back and forth movement is a way for them to control price, I don't know. I've never quite understood why it moves back and forth like that with such veracity without leaving the building. At some point, I think you're going to see mass exodus off the exchange until there's a force majeure or cash settlement, because the rehypothecation, the massive over leverage in the COMEX market is something that could quickly blow up if you see these people keep pulling their metal off the exchange. These others, very, very quickly, the whole jig is up. So I don't know. I think more telling would be how much is leaving the building more than anything, Chris. And the back and forth, keeping it under the COMEX roof doesn't make a whole lot of sense to me, other than to say it could be an industrial who is buying on behalf of a bank and leaving it in that bank's account. That's a possibility. Who's leaving it on the COMEX until they need to take it for delivery for consumption. But here again, once people realize that the COMEX is a shell game, I think you'll see people flee and pull their metal off like the others are doing right now, the other category.
Well, I could imagine that. And one last one for you. We've had some platinum and palladium talk on the show this week. And I had Trevor Raymond from the World Platinum Investment Council. I asked him about this. He didn't feel it was necessarily a drain on the COMEX. Again, and I don't know, there's perhaps room for different opinions, but we'll just look at the numbers. You see less than 100 throughout the year. Here's palladium. Then in June, when we're seeing gold and silver records, 203, then a big boy 570 there. Although if you think that's interesting, here's platinum. Looks like non-delivery month, it's about 20 or 50 contracts. Then delivery months, 400, till you get a 10X in July. And then now in October, as we come to the close of the month, close to 6,000. Any thoughts on what we're seeing in platinum and palladium?
Yeah, well, I mean, platinum is very similar to silver in terms of its fundamentals, way undervalued in comparison to gold and in comparison to palladium. And here again, the deliveries are the important part. I mean, is this stuff being taken off the exchange? Is big money realizing that commodity is a value, that everything else is overvalued, that equities and treasuries and anything interest bearing is at the tail end of an Uber bubble, but commodities aren't. And in fact, when you look at platinum, when you look at silver, I see the two most undervalued real-time assets around. And so maybe the big money is realizing that and pulling it off the exchange because they fear the same thing that the others do, the other category of a exchange that is being exposed for what it is. So yeah, I think if I were going to be pulling things off, platinum and silver would be at the top of the list. They're the most undervalued commodities, historically so. And when you're talking about chasing an investment or looking for a place to park your money, where better to put it in something that is tremendously overvalued, that is needed in industry, that has historically been higher in ratio to other, gold as an example. Well, it just makes sense. It makes sense, Chris. And I think that the big money is always ahead of the crowd. The big money who is this close to the system, to the COMEX, to the way that the market works, I think they're getting ahead of everyone else. It doesn't work when everyone runs for the door at once. And but getting ahead of it and getting positioned before everyone runs for the door at once, is what I take from that. Massive deliveries. You're seeing as much delivered in platinum, in gold, and in silver in a month as we typically see in a year. That's unusual. So there's a reason behind it, and I guess it's counterparty risk to me. I think it's getting it out of the system before the system breaks is what I take away from all of that.
Well, speaking of which, before the system breaks and getting some metal, Andy, just before we wrap up tonight, do you got a red hot special for folks at home? So they're listening to all this gold and silver talk. They're seeing Goldman, JP Morgan, Bank of America, Citigroup, Morgan Stanley, Santa Claus say, get your silver, get your gold. So what do you got for us this week?
Yeah, I have Australian kangaroos right now, and they are, sorry, I just had that sent to me. Give me 10 seconds. I believe they are $369 over the price of silver, but I just want to double check. Let's call it $369 over the price of silver for 2020 kangaroos for Arcadia listeners. Absolutely. And a portion of every sale that we do does go back to Arcadia. It's just our way of saying thank you for doing what you're doing and letting us be a part of this. And Chris, you're doing a great job, man. You're getting the word out there, and that's really important. It's really, really important because I think a lot of people are going to be hurt when this thing unwinds. And I look at gold and silver as a place to put your money safely that gives you wealth in a time of great uncertainty. And to me, there is no better place on the planet than silver. And I think you're doing an amazing job fighting the fight that you are. And you mentioned Bill Murphy, being with Bill. You know, like I say very often, we all owe Bill a debt of gratitude, him and Chris Powell, for fighting the similar fight, standing up and letting the world know what's really happening. And no one's done a better job of that than you. I often say it, the interview you did with Bart Chilton was the most revealing thing I've seen in 30 years. It vindicated so much of what I've believed and talked about for 30 years. So appreciate being a part of what you're doing, and I applaud you for your efforts. And of course, give my very warmest regards to Bill and my gratitude to him as well.
I will do. I think we're going to record an in-person interview tomorrow with Mr. Murphy. I did give him that silver eagle, and I got a picture. Fortunately, I sent it to you before my phone got stolen last night. So.
Your phone got stolen last night. Oh my gosh.
But such are the things that happen. In either case, though, I thank you again for being here. Again, that email address, if you would like some of those kangaroos at $369 over, is arcadia@milesfranklin.com. And if you'd like to check out what Ted had to say at Silverfest, digging a little deeper into the inventory on the COMEX, well, that is coming your way now.